Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for September 7th, 2009. This is Jason Ayres of OptionSource.net. As always, I want to take a look at our weekly U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. And we're really telling the same story this week as we were last week. This 78 level continues to be a strong support in the bigger picture. And until we see a break above 79.80, we continue to believe that the path of least resistance is to the downside, with a near-term target being into this 76-77 box. If we take a quick look at our daily snapshot, you can see that we still continue to form that sideways triangle, suggesting that a major move should or could be expected. Generally, the sideways triangle suggests a continuation in the direction of the major trend, which has been down. Once again, that 76-77 box being a logical target. Let's take a look at the first of our ISE FX options pair values, the CDD, the US versus the Canadian dollar. As you can see here, we are back down testing that 107, 108 focal zone, which continues to be a very strong support level for this particular pair value. Now, the beginning of the week saw a test of our basically the 111, 112 focal zone, and until we actually get a break above this, we believe that the path of least resistance once again continues to be to the downside, with this 103, 104 focal zone being our first near-term target. Well, perhaps the biggest move this week was the YUK, the U.S. versus the Japanese yen, as the U.S. dollar continued to lose strength against the yen, playing down into this 92, 92.5 support level that we'd identified last week. Now, at this point, we may get a little bit of backfilling here right up into this 94, 94.5 focal zone, which is a natural retracement level. However, a break below 92 opens up the window for a move that may break down as deep as this 89.90 box. Next up, the EUI, the US versus the Euro. Very similar observations this week as in last week. We still continue to see resistance at that 70.5 focal zone as the US dollar makes its attempt to gain some strength against the Euro. At this point, we do see a moderate support level in it, that 69.5 level there. However, the path of least resistance does continue to be to the downside, with the 68 to 68.5 box being a logical target. We are seeing some indecision here with respect to this pair value. However, as long as we remain below this key trend line that we've been watching over the last several weeks, once again, the path of least resistance continues to be down. Let's take a look at the BPX, the US versus the British pound. It appears as though our pair value is heading back down to test that 60 to 60.5 support level identified here. Now, we did have a test of this 62, 62.5 focal zone earlier on in the week, and we did see rejection here. Unless we see a break above 62, we still believe that the path of least resistance for this pair value as well is to the downside. Well, the US dollar broke below a major support level against the Australian dollar, as seen here in the AUX. Now, the 117, 118 focal zone still remains a key support. However, unless we see the pair value break back above 118.5, we are looking at the 114, 115 focal zone as being the next logical target. Let's review our key points. As with last week, the U.S. dollar has been unable to break that resistance at 79.80. The trend continues to be down. However, 78 remains an important support level. A break below this is likely to result in a deeper sell-off. The CDD continues to hold support at 108. There continues to be a lot of indecision. The 110 focal zone was tested this week. However, until we see a break above this level, the path of least resistance continues to be to the downside. The YUK continued down to test a key support at 92. We may see a bounce into the 93-94 area. However, if the 92 level breaks, we may see a sell-off that could extend as deep as 89. The EUI still remains below the 71 level and appears to be forming a sideways triangle, suggesting some indecision. Until we see a break above 71, we anticipate a continuation to the downside. The BPX retested 62 and rejected. Until we see a definitive break above 62, the path of least resistance continues to be down. The AUX broke a key support level but remains in our 117-118 focal zone. Any consolidation below 118.5 suggests another leg down. And this has been your ISE FX Options Weekly Outlook for September 7, 2009. I'm Jason Ayres of OptionsSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.